Are you a stock investor and wondering what it means when somebody says that stock is cheap? This is Roger Groh at Groh Asset Management. Well, to some people that means that the share price is low, but probably to a more sophisticated investor it means that that total company's value is low relative to what it, quote, should be, unquote. What determines cheap is in the eye of the buyer, because there is no one definition. If it were me, we think cheap is when public companies are priced the same as private companies. An example, you can go and you can buy a McDonald's restaurant, the whole thing, in whatever town that you live in. You're going to pay 1 times the gross earnings in that business and maybe 8 to 10 times cash flow for a healthy company. Now, if you think about it, when you do that, you have to run it. You have to staff it. You have to deal with all of the things that come with running a large operation. On the other hand, you could also go and buy the common stock of McDonald's. And you don't have to do anything other than sit back and wait for the dividends to come in. So it's easier. And therefore, the premium that it sells for is higher than the private buying the restaurant. How big? Well, in today's world, it's about double. So in my mind, when McDonald's is cheap is when the public stock sells at the same price as the private restaurant. Doesn't happen very often, but when it does, go to Max. I'm Roger Groh at Groh Asset Management, and thank you very much for spending time with me.